Hi guys, welcome to my channel. Before we get started, make sure to hit that like button. Also subscribe to my channel. Investment strategies for long-term wealth building. So make sure to watch the full video. Investing is a powerful tool for long-term wealth building. Whether you're just starting out or have been investing for years, the goal is always the same: to make your money work for you. However, there are a variety of investment strategies out there, each with its own advantages and disadvantages. It can be overwhelming to try to navigate the world of investing. But with a little knowledge and a clear understanding of your goals, you can develop a successful long-term investment strategy. In this article, we'll explore some of the most effective investment strategies for building long-term wealth. We'll discuss the benefits of diversification, the importance of setting realistic goals, and the advantages of both active and passive investing. We'll also look at the role of risk management and the importance of keeping costs low. By the end of this article, you'll have a solid understanding of the key elements of a successful long-term investment strategy. Before we dive into the specific strategies, let's take a moment to discuss why investing is so important for long-term wealth building. There are several key reasons why investing is a crucial component of building wealth. 10. Invest in index funds. One of the simplest and most effective investment strategies for long-term wealth building is to invest in index funds. Index funds are mutual funds or exchange-traded funds, ETFs, that track the performance of a specific stock market index, such as the S&P 500. By investing in an index fund, you can achieve broad diversification across hundreds or even thousands of stocks with just one investment. Not only do index funds provide diversification, but they also tend to have lower fees than actively managed funds. Over the long term, even small differences in fees can have a big impact on your returns. By investing in low-cost index funds, you can keep more of your money working for you. 9. Focus on growth stocks. Growth stocks are companies that are expected to grow at a faster rate than the overall market. These companies tend to reinvest their earnings into their business, rather than paying out dividends to shareholders. While growth stocks can be more volatile than other types of stocks, they also have the potential to generate higher returns over the long term. When investing in growth stocks, it's important to do your research and choose companies that have a solid track record of growth and a competitive advantage in their industry. Look for companies with strong management teams, a solid balance sheet, and a clear growth strategy. 8. Invest in real estate. Real estate can be a powerful tool for long-term wealth building, providing both rental income and the potential for appreciation in property values. One way to invest in real estate is to purchase a rental property and generate income from rent payments. Another option is to invest in a real estate investment trust, REIT, which allows you to invest in a portfolio of properties without the hassle of property management. When investing in real estate, it's important to consider factors such as location, property condition, and the local rental market. You'll also need to have a plan for financing your investment, whether through a mortgage or cash. 7. Use dollar cost averaging. Dollar cost averaging is a simple investment strategy that involves investing a fixed amount of money at regular intervals, regardless of market conditions. By investing a set amount on a regular basis, you can take advantage of market fluctuations and potentially buy more shares when prices are low. Dollar cost averaging can be an effective way to build long-term wealth, as it helps to reduce the impact of market volatility on your portfolio. However, it's important to keep in mind that this strategy is not a guarantee of investment success. 6. Take advantage of tax-deferred accounts. Tax-deferred accounts, such as individual retirement accounts, IRAs, and 401k, can be powerful tools for long-term wealth building. By contributing to these accounts on a regular basis, you can take advantage of tax-deferred growth and potentially reduce your current tax liability. When investing in tax-deferred accounts, it's important to choose investments that are appropriate for your risk tolerance and investment goals. It's also important to regularly review your investment allocations and make adjustments as needed. 5. Consider dividend-paying stocks. Dividend-paying stocks can be an attractive investment option for long-term wealth building, as they provide both potential capital appreciation and regular income in the form of dividend payments. Dividend-paying stocks tend to be more stable than other types of stocks, making them a good choice for investors who are looking for lower-risk investments. When investing in dividend-paying stocks, it's important to consider factors such as the company's track record of dividend payments, its financial stability, and its potential for future growth. Look for companies with a history of consistent dividend payments and a solid balance sheet. 4. Practice patience and discipline. Perhaps the most important investment strategy for long-term wealth building is to practice patience and discipline. Investing is a long-term game, and it's important to stay focused on your goals even in the face of market volatility. Avoid making emotional investment decisions based on short-term market fluctuations. Instead, stick to your investment plan and focus on the long-term growth potential of your portfolio. By staying disciplined and patient, you'll be able to build long-term wealth and achieve your financial goals. 3. Invest in emerging markets. Emerging markets such as China, India, and Brazil offer some of the highest growth potential in the world. While these markets can be more volatile than developed markets, they also offer the potential for higher returns over the long term. Investing in emerging markets can be done through mutual funds, ETFs, or individual stocks. It's important to do your research and choose investments that are appropriate for your risk tolerance and investment goals. Look for companies with a strong presence in emerging markets and a solid growth strategy. 2. Invest in yourself. One of the most powerful investments you can make for long-term wealth building is to invest in yourself. This can take many forms, such as education, training, or starting your own business. By investing in your own skills and knowledge, you can increase your earning potential and create opportunities for long-term growth. Education and training can be done through formal programs or through self-study. Starting your own business requires careful planning and a willingness to take on risk, but can provide significant rewards over the long term. 1. Use asset allocation. Asset allocation is the process of dividing your investment portfolio among different asset classes, such as stocks, bonds, and real estate. By diversifying your portfolio across different asset classes, you can reduce the impact of market volatility on your portfolio and potentially improve your overall returns. Asset allocation can be done using a variety of strategies, such as a target date fund or a customized portfolio. It's important to choose an asset allocation strategy that is appropriate for your risk tolerance and investment goals. In summary, investing for long-term wealth building requires patience, discipline, and a willingness to take on risks. By using a variety of investment strategies such as index funds, growth stocks, real estate, and tax-deferred accounts, you can build a diversified portfolio that can help you achieve your financial goals over the long term. Additionally, investing in emerging markets, investing in yourself, and using asset allocation can further enhance your investment strategy and help you build wealth over time. Remember to do your research, stay disciplined, and focus on the long-term growth potential of your portfolio. What do you think of our video? Let me know in the comments section below. If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go.